Hi everyone and welcome to our market update for July 2016. I'm Aaron Upcroft. I'm here with Rob Gilmour. RBA decision today, Rob. Tell us about it.
Yeah, thanks Aaron. Well, the Reserve Bank left the cash rate at 1.75% today, which was widely expected.
Widely expected indeed. I think there's a bit more to talk about over the last little period. We had Brexit and we've got obviously the uncertainty with our elections. So tell us a bit more about that.
It's pretty hard to feel good about anything at the moment.
Yeah.
It's quite deflating. I mean, obviously Brexit was a big shock. Financial markets weren't expecting that. And we saw some huge moves in currency markets and in the stock market, and some of those markets have recovered, but there's definitely going to be some lasting damage going on over there in the UK and Europe. It's certainly going to hurt business confidence and certainly going to hurt growth. And look, the exact repercussions of that are completely unknown. It wasn't a binding referendum. There's certainly something that's going to drag out there for the next couple of years. And of course, closer to home. Who would have thought last weekend that we probably won't get an election result for some weeks, possibly the worst outcome. Again, pretty sapping on growth prospects, and people starting to look closely at Australia and how we're viewed, in terms of a credit rating. So it has lots of implications, and quite frustrating, really, that difficult times require some leadership and decisions, and it doesn't look like we're going to have a parliament that's going to be equipped to do it.
Yeah, so confidence is waning, obviously, somewhat. There's uncertainty around, and look, I think I see the same with the mortgage markets. I think it's holding pattern somewhat as to what's going to drive mortgage markets. I mean, competition's still there. There's no question about that. The owner-occupied rates are still really low. Investor movements recently, there's been some major changes there from 1 July. There's been a couple of states that have increased their stamp duty for overseas investors again, but it's the same story we've been talking about, just to monitor the market and sort of slow the markets down in relation to the investment side of things. But it's interesting, right? I mean, there's a lot of uncertainty, and that's really the key thing that's driving everything else. Same thing goes with property market that I'm seeing. Not on the ground, I think things are taking a little longer than expected, despite the fact that there's general buoyancy in the market. I think that things are still taking a little longer than expected to transact. So interesting story.
Look, it is an interesting story, and confidence is really important. And where that sort of where things will go in the coming months is difficult to say. I think looking more broadly, if you're talking about mortgage markets and banks, I mean, a huge implication would be if we lost our AAA credit rating.
Yes.
That while it itself is probably not viewed material in terms of countries around the world, the US is not AAA, but it would actually have an impact on the cost of raising money for banks.
Yep.
They will be forced to put up their rates, but as a counter, the Reserve Bank will definitely feel like keeping its rates lower for longer. So I think in this environment, uncertainty around Brexit, what we've got here in Australia, even in the US, they're slowing down the pace of rate rises. It's certainly going to be rates lower for longer, and central banks still kind of trying to stimulate markets and prop up the whole story. So interesting times.
Yeah, so there's a lot to watch over the coming months, but that's our market update for July 2016. We'll see you again next month.